Hello everyone, welcome back to our Accounting 210. In this video, I want to look at the My Accounting Lab questions and then do some practice with you. Now let's get started. I haven't looked at those questions. I hope they are not too hard. So we look at the big problem first. Okay, so let's look at it. Preview. Let's see. Wow, you have three questions. Okay. So let's get started. Okay, let's go ahead. I put it here. I put my notes. I put my notes on this side. Okay, I put my note here. Give me 1 second. Okay, I'm ready. So let's look at the first one. You have this. What does it want you to do? Okay, it wants you to fill in the missing information. So basically, we talk about, okay, so this one asking you about ROI, residual income, capital turnover, sales margin, or something. I'm not going to do everything with you. I 100% believe that my students will get this by yourself. So just give you some idea, and then we go to look at the next one. Okay, I'll give you some idea. Okay, so I put this is the first one. So you have all the data, enter the capital turnover to 2 decimal. Okay, so let's look at it here. I put it here. That's good enough. That's enough. Oh, it's the same. Okay, so it's the same. Okay, so we don't need this. Okay, so what do we need? First thing is you put all the formula there. The way I do it is, I got click there. So we have ROI equals to what? Operating income divided by assets, right? And then we said it equals to operating income divided by sales. This is the sales margin, right? And then times the sales divided by assets. So this is the turnover, capital turnover. And the residual income equals to operating income minus assets times the required rate of return. So whenever you have, the data, you should be able to get the missing one. So I look at this company, and you do this two by yourself. So you have sales, operating income, assets, sales margin. So sales margin you should be able. It's just the sales divided by your sales margin is operating income divided by sales, right? Operating income. Okay, you know this one. Capital turnover is your sales divided by your assets. So it's your sales divided by your assets. You know this one. Return on investment ROI equals to operating income divided by your total assets. You can get this one. Target rate of return told you need to be able to get the residual income, operating income minus your total assets times your 11%. So I assume you should get everything by yourself. Okay, for this one is straightforward. This one you may say, how do I get sales? So let's look at this one. Sales margin is 15%, right? So sales margin is 15%. It equals to your operating income divided by your sales. And then operating income is 117,000. So you should be able to get your sales first, and then you can go ahead and do everything. I believe my students will get this one. I don't worry about you. Next one. Okay, next one, classify each to this perspective. Okay, so select all that applies. So select all that applies. Okay, select all that applies. Employee certification rating. You know this one, right? It's employee. It's learning and growth perspective. So check answer. What? I think because I didn't finish. Okay. Okay, so you can ROI definitely is your financial. Gross margin is your financial. I think it's a good way to practice because I think you definitely will have at least one multiple choice in the exam. So make sure you do this. Same to this one is 2 process of order filled each week. Percentage of orders filled each week. I'm not sure. I think you need to look at the textbook to get the 2 perspective. I don't really like it. I promise you in the exam you just have 1 perspective. So, you know, read textbook, get 4 points, and that's it. I promise you in the exam it will be straightforward. You know what it is. I'm not going to put this thing. You have two perspectives, you know, in the exam. Okay, so don't worry. Say, hey, what should I do in the exam? Don't worry about that one. Let's see. You haven't finished? Are you sure? Yeah, I'm sure. Okay, let's look at this one. This one said that you have written this about your budget and the actual performance. Okay, so it's the same, asking you fill in all missing part, be sure to, for favorable, unfavorable, right? Favorable, unfavorable. Actual, hey, this is very similar with my summary one. I think this still my notes, so I stole their notes. Okay, so, so one more time, okay, I want to review also one more time. So your left side is actual, right? Your actual, remember what is actual is actual units time your actual dollar amount. And then the right side is your budget. This is your master budget. So it's your budgeted units time your budgeted dollar amount. And in the middle is the flexible. So we said the flexible is part actual, part budget. So A, B, B, B. So it's actual units time your budgeted dollar amount. So this difference is called flexible budget variance. This is called volume variance because the only difference is the different volume. It's your actual volume or budgeted volume. So now you can put, right, actual is 29,000, your flexible budget, this will be 29,000. So can I do it? Okay, 29,000. And then your master budget is this much. Sales revenue, as I said, the first step is you need to calculate for each unit the price. It doesn't ask you, but you can calculate by yourself. So I'll do it one more time with you, and then this one is you got 246,500 over 29,000 units. So each one is 8.5. I put my note here. So this one is 29,000, 8 point, how much? $8.5, $8.5, right? So this is the actual revenue. And then the budget, I don't know. Okay, but for here, I can tell, you say actual is 246,500 and it's 5,800 favorable than your flexible budget. How do you get your flexible budget? Your flexible budget will be 5,800 lower than your actual. So 246,500 minus 5,800 gives you 2,4,700. Okay, 2,4,700. And then how do we get 2,4,700? We got this over how many units? 29,000 units. So each one is 8.3. Now we can write here is 29,000 times 8.3. Okay, now you need to calculate your master budget, the revenue. How do we calculate our master budget revenue? We already know. We already know your price. Your flexible budget is the same as your master budget, right? Sorry, it's important. So we know your master budget, the units is 31,500. So you have to use 31,500. But we know the price is the same as your flexible budget. So it will be 8.3. And you just do the number 8.3. And then, but now you use your budgeted units time 31,500. You get 2,614.50. 2,614.50. And then the difference will be the variance, right? Minus 2,4,700 gives you 27.50. So I put 27.50. Your left side is larger, or no, is lower than your right side, and it's unfavorable because it's revenue. Okay, so I have to say this one takes a while. I want you to practice. I really do want my students to practice this one. then you do similar thing, you know, you have to calculate each one, the variable cost, you know, and then you do everything there. Okay, I think this is good practice. It may be a little bit harder. I think I can give you a solution to a very similar question, so you can first check your answer with that practice. Let me know if you have any question, but as I said, I think this is a good one. Okay, I stop here. I will review your multiple choice in the next video. I see you there. Thank you.